Chapter 7 addresses cash and accounts receivables, or various kinds of accounts receivable. I'm not actually going to lecture any over cash. I think you can get that out of the book and through the homework, but certainly if you have questions you want to ask your instructor. I do want to point out one thing from the textbook, and that has to do the difference between this gross and the net method of recording cash. As you know, if a customer pays early, often a company will give them a discount for paying early. So we have two options, the gross method and the net method. The gross method you would have covered in your accounting principles course. So the net method is what's actually new. Let's kind of look at this real quick. We sell $10,000 worth of goods. So we have sales revenue of 10, and this is ignoring the cost of goods sold entry. We're just focusing on the sales revenue. So if a customer pays early, then we won't get the full. In this case, there was $4,000 of receivable. We don't get the full $4,000 because they're going to get an $80 discount. And the gross method is if we want to track the dollar of the discount that customers take advantage of, then we're going to use the sales discount. So we see 4,000 of it is paid early, so we only get $39.20. The other 10,000 of the receivable is paid after the discount period, and so we don't. So we receive the full $6,000 on that. So let's go over and look. If we had an income statement, this is sales. Subtract sales discount of 80. That gives us our net sales. So that's going to be right at the very top of the income statement, starting with net sales. There weren't any operating expenses and et cetera, et cetera. Income before taxes would be $9,920. Now if we use the net method, then that is really going to track the discounts that we're not taking advantage of. So it's a choice of, do we want to track in the accounting system the discounts that we're taking advantage of, or the discounts that we're not taking advantage of? If we want to see, what's the dollar amount of our customers that aren't paying early, we would use the net method. So in the net method, we record receivables and sales revenue discounting or subtracting the discount. So instead of 10,000, we record revenue and receivable of 9,800. So when the customer pays early at the gross receivable of 4,000, here we get 39.20. That's what we're going to record, the 39.20 over here. Then at the very end, notice we still have the same entry for $6,000 down here. Cash will come in, but keep in mind we wouldn't have $6,000 in our accounts receivable. So we've got to put the $120, in essence that would have been the discount if they had paid early, put that back in receivable, so we have a balance in receivable of $6,000. Right? We started with 9,800. We have subtracted 39.20. Let's see, what is that? 80. 17 minus 9 is 8. So we have 5,880. So we need to put this additional 120 back into accounts receivable, so it has a balance of $6,000. So now, after this debit, there's $6,000 in the receivable, and that's what we're going to decrease it with the cash coming in. The other thing is this $120, the sales discount forfeited. And I want you to understand that's really other revenue. That's other, that's going to get reported as other revenue. Down at the bottom, not the bottom, but in another section of the income statement. So we have net sales. It would go all the way down to operating income, all the way through operating income. And then we'll have this $120, and it's considered other revenue, other expenses of $120. Either way, income before tax is still $9,920. But again, it is a focus on what is management wanting to track, and then accountants, we just set up the system to make that happen. Okay? All right, so that is going over gross versus net method.